everyone, welcome back to Yuri's Box. In this video I'm going to give a quick update on TLT. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So just looking at the purely technical level, there is something to like and something not to like. So you have the breakout of the trend line. And you actually backtested it right here with this, 2 weeks ago with the dump that we actually had culminating on April 9th. So that's the like, honestly. This is something that we've actually seen last time as well when we broke out last year. This was June of 2024. We actually had a backtest. You can also argue that perhaps this was right here and it wasn't, depending on how you draw the trend line. But in any case, we did get, some confirmation of the trend line. And you could also argue that, again, this is exactly what we've seen right here. What's not to like? We still have this weekly candle right here, which is, what's bugging me about this candle is the wick, all right? It's wicked up to the bull market support band, and you could argue it's a rejection, although there are still plenty of things that still have to happen, honestly. So I wouldn't read too much into it just yet. Today, on the other hand, we had quite the deluge of data. We started off with durable goods orders. I was mainly offline today, so I didn't really follow much of the drama, and I'm guessing we had it today as well. But we actually got a massive beat on durable goods orders. I tried to dig just to try and see what this was about, and apparently it's mainly about Boeing. Boeing orders basically skewed the number by quite a bit, so they have that to consider. If I'm not mistaken, I don't remember if it's non-defense goods or durable goods. I think it's non-defense orders ex-air that goes into GDP, which came just below consensus. So keep that in mind as well for when we have the GDP print. We had existing home sales. Okay. What I'm more interested in is the initial jobless claims print. It was exactly at consensus. And again, if you've been following my channel, you'll know there are basically two things I use to, come up with my personal forecast. And they're not bang on accurate. They're just my way of just putting my finger in the air and coming up with a number. But I kind of got close the first time. I had a forecast for 105 for the month of February. And 4.1 on the unemployment rate for February. I got that one right. I didn't really feel comfortable giving a forecast for last month's Nonfarm Payroll report for the simple reason that when I was reading the PMI report, and we went over this, you did have more of the same, all right? Meaning that business expectations were low, everything's down down the tubes, but you did have, again, this feeling that there was probably going to be a bit of a bump in March compared to February. And so that really, I didn't really feel comfortable speculating, giving a forecast on, giving a precise number, because again, yes, you did have, expectations low. I mean, for the outlook, for the future being quite pessimistic, but you also had possibly some activity growth. So I did ponder whether to say something like something weak like 110 or even 200k, and 200k is what we got. I did feel comfortable, however, looking at the unemployment rate, saying that we could have had an uptick on the unemployment rate if we had an uptick on the labor force participation rate, which is what we got. Just to give you a sneak peek, I'll confirm what I said yesterday. If you had to put a gun to my head, and I had to come up with a number for next Friday, my personal expectations are a week number. All right, and again, I'm definitely on the bearish side, so keep that in mind. On non-farm payrolls, I'm expecting something like, I'll say 75K. Because again, you don't see just things falling off, but you're not seeing that, the economy power through. And again, we saw that in things like, the manufacturing surveys, and the beige book. We made a video about that, extensive video about that yesterday. So I'm expecting a weak number, something around 75K. And again, as far as the unemployment rate is concerned, we did get another read. And again, if you haven't followed my channel before, my kind of line in the sand is anything below 215, you can expect the unemployment rate to decline in the following report. Anything above 220 is, reason to believe that you'll likely see the unemployment rate go up. Overall, the initial jobless claims have just been bobbing around, the 220 mark. So I'm not expecting the unemployment rate to go up dramatically, unless, and again, I'll just do a copy paste, unless we see the labor force participation rate go up. All right. Of course, you can definitely see some shenanigans where you get the labor force participation rate going up and unemployment rate going down. Again, it's you can definitely see that happen as well. But again, I'll stick with 4.2 on unemployment rate. And if we see some kind of move in the labor force participation rate, I would expect it to go up to 4.3. I wouldn't expect anything too dramatic just yet, like 4.4. I would say anywhere between 4.2 and 4.3, if we have a move in the labor force participation rate. We still are missing another read on initial jobless claims. Again, today's number came in at 222, which was bang on expectations. Continuing claims ticked down a little bit, but we still seem to be, stuck in this range here. I'm not going to dare do technical analysis on this, absolutely not. But we're stuck. We've been stuck here ever since September of last year, even further back, June of 2024. And again, you could also extrapolate possibly the fact that just looking at continuing jobless claims, that the economy hasn't really moved away from where it was last summer, and that again it just chugged along, given the fact that we had all of those transitory events that we had from September to January of this year. So that's just dubious speculation, as the great Benjamin Kahn would say. So again, I wouldn't read too much into that. So again, today's numbers really didn't move the needle too much. Tomorrow we do have another read on the the infamous, I'll say infamous at this point, Michigan Consumer Survey. We're expecting things to continue to go on to be on the decline. Really, we're expecting 50. Really a confirmation of the 50.8 read. And again, if I'm not mistaken, we actually got a lower read compared to the preliminary read last time. So again, be open to surprises on both sides of the Michigan survey, meaning the sentiment, and the inflation. I would expect inflation to just come out even at 5%, something even higher than consensus, honestly, given the fact that we have all of this tariff drama, and we've had all of this tariff drama in April, and we didn't really have any significant developments, all right? Like even today, I was on X just before starting recording, and Trump said, "Oh, we spoke to China." Then apparently China said we didn't speak. Then Besson came out and he said that everything's going great with South Korea. But again, where's the beef? That's I guess that's what everyone is waiting for. All right. I mean, yes, dialogue is great, communication's great, absolutely. But again, we're still in a phase where everybody's kind of dragging their feet. All right, and that's that's the big news that really you should be paying attention to when in regards to the tariff news. All right, I personally I think that from here on out it's just going to be downhill, meaning we've peaked out on the tariff craziness. All right, I've been of that opinion ever since Trump exempted electronics a couple of weeks ago. I think it was Saturday or Sunday, 11th or 12th of April, something like that. That's when he backpedaled. And again, from that point on, it's just like, yeah, all right, it'll take time, of course, and I've mentioned this before, actually. When we had the last trade war, we went from July of 2018 till December of 2018, and we only got a truce at that point. All right, we didn't really get a deal. So I'm not expecting things to, move fast from this point on. However, again, I think we've peaked out on the craziness on the tariff side, and from here on out, I just think we will get more deals. Something else I will add about the tariffs. If everything that we've been going over, the PMI reports, the regional surveys, the Fed Beige Book, if they continue to trend in this direction, I remain of the idea that we will eventually get to a point where tariff and really trade deals will not be an option. Everyone will be forced to come to the table and get down to deal making, because let's face it, if the U.S. economy sneezes, the rest of the world is going to catch a cold, and at that point, everybody's going to be scrambling, possibly. All right, so I would also, I'll leave you with that to consider as well. So, again, what I'm trying to say is that we'll be in a position most likely where, right now we're still playing. All right, everybody's just running around like a headless chicken. All right, I think that we'll be forced to get down to business eventually. And again, I've been speculating even before the tariff drama that we have an appointment with the summertime. All right, again, we usually see the economy start to falter and start to suffer a little bit throughout the summer. So again, I think that will be an interesting time for the economy. And again, well, the only thing you can do is just wait and see. As far as TLT is concerned, again, this week is kind of a, for lack of a better word, transitory week. We didn't really have any drama. We didn't have anything to keep the price really suppressed. And again, the fact that we've had Besant really regain the driver's seat of the tariff negotiations and leave Lutnick behind, that is definitely good news for TLT. It's definitely a steady hand as opposed to I leaving politics aside. I mean, Lutnick just seems like the opposite of a steady hand. I'll leave it at that. Okay, so I think that as far as TLT is concerned, Besant is definitely a positive force. Again, maybe tomorrow he'll come out and he'll throw a Lutnick and everything will go up in flames. But until he does that, I remain of the opinion that it's better to have Besant in the driver's seat rather than Lutnick. And so again, this week wasn't really that important. Next week will be an important week, all right, because we have actually a JOLTS reading for the month of March, which actually makes us catch up, really. Given the fact that we've had a lag of about a month. We currently have 7.4 million job openings, at least for trading economics. I'll be watching like a hawk, obviously, for the job quits level. And we have another round of Dallas, regional indexes. But of course, Friday, May 2nd will be really what will drive things like TLT. And again, we actually do have a first consensus here. We have 130 and 140. I didn't notice this before. I remain of my the opinion that we'll probably see something like 70, 75K. Definitely nothing overly dramatic, like say negative 100K, but nothing that suggests strength. Okay, I think that is 75K would be consistent with everything we've read really in the Beige Book and the PMIs. Of course, non-farm payrolls is usually surprised to the upside, as as it has done in March. With 228K. Look for revisions to previous months. But again, expect the unexpected. This has really kind of been a random number generator. Unemployment rate is expected to be at 4.2. And again, that doesn't surprise me at all, given what we've seen in initial jobless claims. Nothing really changed. What I will say, going back to initial jobless claims, I wouldn't be surprised if it stays stable to slightly up. Where are you, jobless claims? Job openings. I wouldn't be surprised, actually, here they are, if job openings for March next week actually tick up just a smidge, and they actually just go down and lower in April, given everything we've read in the Beige Book. Well, you didn't really see layoffs, but you definitely started seeing businesses kind of start to pull back. Okay, so I wouldn't expect necessarily things to move in a dramatic fashion in March. I would expect that to happen in April, potentially. Again, we have consumer confidence, but this is really still quite a way away. So as far as TLT is concerned for this week, we have closed at 88.24. Again, what's to like? The fact that we've had a successful retest, and so far we haven't, gone below, which is, definitely welcome news. What's not to like? This wick right here, which is, the culprit of that is what we saw yesterday. Okay, we saw really an open at $89 and we just flushed down at 87. Today we had, kind of the opposite. Could tomorrow's numbers really spur another rally up to the bull market support band? Well, if you get a negative read, meaning, all right, the expectations are at 50.8. If you get something like 45, especially on current conditions and expectation for the future, that could definitely move it. I would expect. I wouldn't be surprised by both, actually. If we get a worse number tomorrow on consumer sentiment, and actually a higher number on inflation, something like 5 or 5.5. Something ridiculous. But again, how I feel about the Michigan surveys. So that's pretty much it. It's really a dull day, dull week, in my opinion. Apart from the PMI reports, of course, which, again, did nothing to dispel weakness in the economy. In fact, we just saw more of the same. Confirmation of the trend that began in February and possibly begun, actually, in June of last year, of 2024. I'll leave it at that. I'll keep you updated. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.